To assist businesses, we've provided an Excel template on our website to help understand your cash flow and your requirements over the next 12 months. Understanding your cash flow is really the key for businesses surviving through this with the likely decreased revenue from the current situation. Vincents will be sharing more information in relation to cash flow and the skills in understanding your cash flow and the impacts of the virus. This session today is really focused on understanding how to use the template we've provided on our website. I'm just going to jump into that now. So this is available for download on the website. Primarily, the first step, there's a series of tabs in here: inputs, balance sheet, and P&L budget. So the first step to completing this is to complete the profit and loss budget tab. The best starting point for this, I find, is to run your monthly P&L from your management accounting software, so your Xero, your MyOb. Run it for the last 12 months. It's clearly not an indication of what's going to be going forward, but it gives a good understanding of what your current costs are. From there, it's really line by line, looking at what you expect your sales to be and what your costs and what costs you can cut back, the things you can stop immediately, your sort of voluntary spend in terms of sort of some of that's already cut off, and those things that you're going to have to negotiate with either your landlord, your bank and stuff in terms of negotiating whether you can reduce it. And then you can plug those figures into this spreadsheet and see the impact on cash flow and whether it's going to actually mean you can continue or you're going to hit a wall, or when you're going to run out of your cash reserves, and when you need to take further action in terms of cutting costs or to ensure you keep the reserves. So jumping into the template, it's a fairly straightforward Excel model. There's plenty of other models online and tools you can pay for that can link into your software and run. This is intended as a free version just to help you out. Principally, you just plug in your thing. You can use formulas in terms across there and get your budget P&L set up. If something is dependent on another figure, formula is available. The two little points on the side here is your GST rate and a column called wages. GST is just to put your average GST either on your sales that you're going to collect and need to pay to the ATO, or you can claim back on expenses. So if it's GST free, is 0. If it's a mixed supply, you can put in 5% if about half of it's not subject to GST. The wages is purely this, whether it's subject to wages, and if it's PAYG, that feeds into the cash flow and determines when the PAYG withholding is going to due and the amounts of PAYG withholding. Once you have that set up and you're comfortable, I mean, from a perspective of getting it right, is get something in there and then it's a model you can work with and change as you go along. Jump into the next bit, which is really the inputs. The data collection is just setting your expectation of if you make a sale and it's on account, when that's going to be collected, whether it's a month or a couple of months from following sale, or it's a cash sale. So the month of sale is really your cash sales, and then the second and third months, and the balance goes into the fourth month. In this model always adds up to 100%. And in the P&L, if you've got bad debts that you're going to expect, you need to build that into the model. It's not going to allow for a non-collection of a percentage, and the same with creditor payments. And then how changing those creditors from, at the moment, you might be paying 50% in the month incurred, but you might be pushing them out as can, and see how that affects your cash flow. The income tax setting here, generally just put it on installments, and you can select here prior year liability feeds from what's been completed on the balance sheet. And then if you put the installments, you can just write in when those payments are going to be due, or if you need to vary them or get a refund back. If it's a refundable amount, it's a positive. GST payment cycle, you put in quarterly or monthly, so that just automatically flows through to your cash flow statement. So at the moment, we've got a quarterly cycle. If your business is on monthly, drop that down to monthly and it'll update in your cash flow. I mean, just covering something I didn't put the company name in up here. That's self-explanatory. The year ended is just 12 months from today, really, from when you're starting your cash flow. So the plant and equipment section here in capital expenditure, if you know at this stage, obviously be one of the things you cut back on capital expenditure, but if you can afford to, there are the benefits that the ATO have announced in terms of deductions for capital equipment write-off. So if you know you need to get a vehicle in a period and it's not going to be fully financed, then it's good to put that in. And also, if it's a significant purchase, so I've got a vehicle saying I'm going to need that in July. If it's a significant purchase, the cash flow model will also show the purchase including GST, and it'll build that GST you can claim back into the claim. So the more significant, that becomes a more significant element of your budget cash flow. PAYG allows monthly or quarterly and an estimate of your average rate. With the current cash flow boost, that would have to be adjusted, the impact of that on your balance sheet separately. The model was built under normal circumstances and paying that on your BAS. Following setup of inputs, the next step is completing your balance sheet. So a fair few of these where they're blue highlighted, they're the ones that feed in from the P&L budget that you've set and the other inputs. So the cash in the bank feeds in from that. The first step of this is to complete the opening balances, and you need to make it balance. As soon as you put in a figure here, it will put the balance sheet out of balance. So there'll be a corresponding entry in another line to make that balance. So maybe there. Generally, for the white cells, these are manual entry all the way along. Generally, unless you're really sure, that will just be a formula. So if you know your hire purchase repayments on your vehicles are $1,000 a month, you can make that and then plus 1,000. Always gets this error just to say thing. So the formula wrong. So plus that, so you can see it's dropping by $1,000. And when we go to the cash flow, that will reflect in these repayments coming through of how the payments are coming through. This big positive 99,000 is where I've got a balance in here and I've got an increasing loan. So I've already put in a $200,000 increase that project some loans coming in to fund your business through there. Generally with all balance sheet items, just saying have a formula in to make it equal to the last amount and then make your adjustments as you need on there. So if you know you can put in another 50,000 from other sources as a related party loan, you can put that in and that's going to flow through into the cash flow. Right, but here, just making the opening balance correct is the key thing. So in terms of that, provided that is in balance opening, the opening balance here is correct and balances, then you can put anything else in here and that'll automatically balance through to the cash flow. You don't have to balance anything else, and the only time I'll go out if you added a formula. I hope that gives a reasonable understanding to get you started. So the key steps are: 1, get your P&L budget in there, assess your inputs. These can change at any time, so just have a guess. If you run your current creditors and and debtor reports and see how you're tracking at that point in terms of collections if you're not really aware of it. And we can help you if you have any questions in terms of setting those parameters. The next step after getting those inputs is to work on your balance sheet and project it out. Project when you're going to get funds in, project your known capital expenditure that you're going to have to put out. They're the main things. The model is a basic model. It doesn't have assumptions around stock, so need to change that in terms of your depletion of stock, or when you know inventory's got to come in or service it, you may have to increase your inventory in the lead up to Christmas. And if you're continuing, you know you're going to have to build that up before that, and that'll factor into the cash flow. If you know you have to increase stock to 500,000 in the lead up to Christmas, it'll come through into the cash flow and show a requirement. So the output of this is to review your cash flow and look at this. And principally, we're here to help. So if any questions on the cash flow and you do download it and use it for your business and you're having problems, please do not hesitate to give me a call or send me an email, and I can get on and help you. And that's available to anyone. So please do not hesitate to contact me. And best of luck in the months to come. Thank you very much.